Today, folks, I want to dive into 3 Canadian stocks focused in the energy sector that I think have huge potential. You know them well. We got Enbridge, we got Canadian Natural Resources, but I got a small cap play that I think is underappreciated called Avila Energy, a vertically integrated natural gas player. But if this is a conversation you need to appreciate, damn it, hit that like button because everybody loves those juicy dividends. They love getting some growth out of these energy markets here in Canada, especially with Canada leaning so heavily into the natural gas future, investing billions of dollars into massive processing and shipment facilities. And I think they're obviously doing a lot of incentives as well, but we're seeing natural gas start to kind of rebound here a bit as we head into the winter season. This is something that's likely to continue. Natural gas can be somewhat cyclical. If we take a look at the 5-year, thanks to the geopolitical event that went on, as most people might be unaware, Russia makes up like 24%, I think, of the global natural gas reserves. As countries look to become more independent, this is going to become a conversation of choice, especially with the first stock that everybody knows and loves, which of course is Enbridge. This is like the lifeblood of the entire Western world. It is the largest pipeline company that basically exists globally. I think they have the longest spanning of liquid pipelines here. And this one I've been very intrigued by because it's pretty much been offering its total return over the last 5 years just from the dividend alone. Don't trust the price to earning. These are huge infrastructure-based companies with major write-downs that have to deal a lot with the interest rate environment. And the only, I think, negative to Enbridge is this massive amount of liability. It's nice that they've been able to increase the asset base fairly well, but the liabilities have always been kind of coming up in tandem with it. But Enbridge has got one big proponent to it that I'm very intrigued to see how it pays off in 2024. And luckily for most people, we did get another dividend bump. I mean, we're at about, I think it was 91.5 cents is where we currently sit coming into 2024. We're not seeing the same dividend growth that we had in the past, but where a lot of the future growth is going to be coming from is in the natural gas sectors. They did a massive acquisition we'll take a look at, but coming out of 2022 through 2023, very excited to look at the Q4 earnings. The liquid pipelines is the only thing most people are heavily fixated on because that's where a huge amount of the growth has been, but gas transmission and midstream is also going to be a huge proponent here very shortly because of this major purchase that I think came more into play on that third quarter, but we'll get more in light on the earnings side of it from Q4 because they dumped $2.4 billion, making them the largest natural gas powerhouse company now, I think, in North America because of this acquisition, which is basically just regulated assets to strengthen the commercial profile and cash flow stability. And they were smart because they purchased this after the suppression and the geopolitical events, so I don't think they paid any kind of crazy premium for it. Enbridge's management has done exceptionally well, leading us into the second stock here that I'm very intrigued by called Avila Energy. Now you might be thinking to yourself, this 5-cent stock is trading for $7 million. It's down 80% since the recent IPO coming into 2022. Why would we even care about this? Because small caps have been absolutely decimated, and this is where your leverage, I think, is going to pay off much better because people have just written this stock off. Even though when you look at the assets here, and I was joking with some friends, can we just put our money together, outright buy this company and liquidate their assets? Because they have 45 million in total assets and only 17 million in liabilities. They have about a $28 million NAV value, net asset value, against a $7 million market cap. I'm going to do a specific video on this because we can get into their operating expenses because they're not profitable yet. But this year is the anticipation of profitability because basically they're producing just over 600 barrels of natural gas right now located in Alberta, and they're going to get to a point basically in the next quarter where they're going to be profitable because they only really need to make 650 barrels be profitable, and natural gas has gone up pretty dramatically since a lot of these quotes came into play, and they're looking to get about 1,400 barrels as their target by the end of this year. So this is going to be a cash flow positive, vertically integrated business, and when I mean vertically integrated, your mind is going to be slightly blown because not only do they own these processing facilities that have 90% margins for them, but what's most intriguing to me is they did a $5 million euro licensing agreement where they paid this European company to sell these natural gas heating generators that apparently cut down some pretty dramatic costs. They'll cut your natural gas bill by 25% while reducing emissions by 50%. And as far as I can tell, I think they had a huge insider sellout that led to a lot of the suppressed stock price during a market where small caps were getting absolutely devastated. But the more and more I look into this company, the more and more I'm like, how are people not recognizing some of the value in some of these small cap plays? Because with a balance sheet like that, with the path to profitability and the vertical integration, you can't help but appreciate the current value of the stock considering it's 100% owned and operated in the wells, the facilities, and 128 kilometers of gathering and sales pipelines. And you can kind of see the locations here between Edmonton and Calgary. I was recently seeing family actually driving between Edmonton and Calgary. I wouldn't be surprised if I just drove past some of their facilities. But being in Alberta, they have a vision as Alberta is a very gas-focused province, but considering the benefits from a CO2 standpoint and the renewable future standpoint, natural gas is a big proponent. This is why Enbridge, this is why all these companies are so fixated on it, because there's a lot of incentives to gather from operating these facilities as well. So there's a lot of benefit, I think, with Avila, and I'm going to do a full breakdown of this company in the future. Subscribe for those updates. But another company to look forward to here in 2024 as well as Canadian Natural Resources. Now, I'm looking at this one as I'm curious to if it's overvalued or if it can continue to keep up the steam that it has had, because it is one of these companies that year over year has continued to hit an all-time high since the lows of the pandemic, which has been absolutely mind-boggling, being basically one of Canada's largest natural gas reserves. And with a very similar balance sheet to Enbridge, they do have quite a bit of debt under their belt, but a 50-50 ratio here, just under a 50-50 ratio, puts it in an intriguing place because, again, both these companies are dealing with the interest rates environment. Both have been very interesting from a dividend standpoint, with Canadian Natural absolutely crushing Enbridge's growth over the last decade. I mean, going from 23 cents to basically $1 is over 4xing of the dividend, plus getting that stock appreciation. But keep in mind, I think Enbridge had a earlier history of growth, where Canadian Natural Resources is seeing a newer history of growth, and a lot of this, keep in mind, is fixated on this natural gas story. However, the big problem here is the deteriorating of the value of gas and oil for this company. This company has gone through the growth phase and is now retracting, because we're seeing the reserves of crude oil and NGLs, the equivalent natural gas. We're seeing all these things increase in the output, but the dollar value in revenue has continued to decline, right? Because if you take a look at the 9-month, they went from 9.4 billion to 5.6 billion dollars. That is a dramatic decline in total growth, right? So this is something to pay attention to with this company, because we can see they went from $9.20 to $5.41 undiluted, yet the stock has continued to gone up against the backdrop of this, and a lot of it's related to discovery, a lot of it's related to those huge reserves that the government's going to lean into, and incentives and other things that come into play. But this can't be a trend that continues. But obviously, as gas seems to level off here in the value and we're starting to trickle back to the upside, it will be one to watch in 2024 as a very intriguing energy play here, considering this is up there with Enbridge as the top 5 largest companies that currently exist in Canada's economy. Now, taking one final look, energy has been where the real value is played in over the last month, give or take. The banks, as we know, the financial sector has been getting hit pretty heavy from new government taxes. They're still dealing with loan loss provisions. I'm going to do another video on the banks telling you that there's still some upside potential as they start recovering from loan loss provisions, but the growth beyond that is going to start to get hindered. So I think the real value proposition only exists today, but the long-term run rate I don't think is necessarily going to be in the financial sector as much as it might be in the energy sector as we get into the interest rate cut cycle. And it's just a lot of things to pay attention to here, considering if you're buying broader Canadian indexes, these are the primary industries you're going to be owning, right? It's just energy and financial. So it's nice to know what's happening in these two sectors, as they're primarily controlled by few conglomerates, which is why I think it's also a proponent to look at some of these smaller cap plays, because there is much better value setups than there currently is in these larger caps. But these are just my opinions. I'd love to know what you think in that comment section below.